If you look back over your career, can you talk about a home run that sticks out? How did you find it? How did you build conviction?
Well, I can think of one that was actually the inspiration for the Value Investors Club. We were just running our own capital. We ran outside capital for 10 years, and we returned all our outside capital. I didn't take outside capital again until 2009, to run directly anyway. So this was during a period where we weren't running outside capital, and so we were just looking for good ideas for ourselves. And one of the we had figured out one of the best investments I had ever seen, and the reason it was so great was it was a company selling at half its cash value with a great business attached. Okay, and usually when I size positions, it doesn't have so much to do. My largest positions are not the ones I think I'm going to make the most money from. My largest positions are the ones I don't think I'm going to lose money in, so that I can buy a lot of that without taking much risk. And if there's some optionality, meaning it could go up. And this had everything. This I was buying at half its cash value with a good business attached. It was a complicated capital structure that people couldn't figure out because it was relatively new and people hadn't seen it. But if you did, that's what you were buying. You were buying something at half its cash value with a good business. So obviously we bought a lot of that, and we thought, oh, we're so smart. We're one of the only people out there who's found this. And then my partner found on a Yahoo message board of all places someone who had figured this out in all its complicated glory. And funny story, the gentleman who figured this out actually was working at a supermarket at the time. He was just a really smart guy, and a light bulb went off, and we sort of said, wow, there's intelligent life out there. Wouldn't it be great if we can put together a group of people who could talk? And people at the time, this was 1999, were looking for millions of eyeballs on the internet and, whatever they were talking about. And I thought the internet was great to have little meetings with people who are all over the country at different times or all over the world. And you could sort of have a little club. I was always fascinated with that idea of an investment club. So he was one of the first members of the Value Investors Club, and it got the idea of, could we attract smart people to share ideas? That was the deal. It was free to join, but you had to share your good ideas. And this gave us the idea that it wasn't just in the normal hunting places that you could find really smart people who did good work. So that was a really good one, half its cash value and with a good business attached. And it was really because it was a complicated capital structure. I wouldn't call it my worst investment, but I'd say my most disastrous investment. I don't know. Anyway, I've had a bunch of, my partner, Rob Goldstein, who joined me in 1989, always joke that, if we worked for someone else over the last 15 years, they would have fired us about 8 times, So you have to be willing to, I guess, make mistakes, and you can't really avoid it. And so our worst one was probably, we actually bought, through a spin-off, a company that actually owned Comdex, which used to be a computer trade show, and it was the biggest one. And we were actually able to create it before the spin-off for about $3 a share. And it was going to sell some new shares at $6, and that had been announced. But yet we could create it by buying the parent and shorting another piece and creating what was left for about $3. So all good so far. But we actually fell in love with the business. What I loved about the business was that they ran this trade show in Las Vegas, and you could rent all the trade space you wanted in Las Vegas at the time. And it was available at about $2 a square foot, and they could re-rent it at $62 a square foot. So whenever the trade show grew, they would spend another $2 and get a $62 contribution. And so we fell in love with the operating dynamics of this business, and the stock actually went from $3 They sold some more stock at 6, and the stock actually went to 12. And we had a really large position at $3. The reason for that is that we thought we could get out right away at 6. We did not get out right away at 6 because we fell in love with the business. It went to 12, so it sounds good so far. But then, unfortunately, shortly after about September 9th, 2001, the company bought another trade show and borrowed a lot of money. And then after September 11th, no one wanted to travel at all. And both trade shows really went downhill, and everyone knows about financial leverage, meaning, hey, you borrow a lot of money, you pay your money, you take your chances, you put up $1, you borrow 9, that's a risky investment. So this is how I learned about operating leverage, which is when you lay out another $2 and collect 62, when the sales go down, right? When you lose $62 in revenue, 60 of your profits just evaporated, and it drops immediately to the bottom line. That's called operating leverage. So that was my lesson in operating leverage. The stock, I think I got out at a little over 1 or so. So, things happen. It's a lesson in concentration. It's a lesson in operating leverage. I learned a lot of things, and I can still safely say I'm always learning. I'm always making a new mistake. I'm trying not to make the same ones, but the same ones usually have a little different face on them. You're really making the same one, but it presented in a little different way, and you didn't notice it, and you would go make that mistake again. And so I guess advice would be, don't be shy about making mistakes, because you will anyway. So,
well, I think that's very important what Joel just said, and I want everybody in the audience to take cognizance of it. I wrote a memo in April called Dare to be Great. And basically it said, if you want to be exceptional as an investor, you have to dare to be great. Everybody here is willing to be great. But to be great, you have to be different. Because if you think the same as everybody else, you'll make the same actions. If you take the same actions, you'll have the same performance. You certainly can't be exceptional if you follow the common course. So to be exceptional, you have to be different. You also have to dare to be wrong. And nobody bats 1,000. The best baseball hitter in history got 4 hits every 10 times to the plate, right? Some investors can do a little better than that, but nobody bats 1,000. And, Joel mentioned that he could have been fired 8 times. And I'm
a very kind boss, so I let myself stay.
And I had lunch today with a guy who works for Berkshire Hathaway, and we were talking about what makes Warren's successful. And I said, one of the things that makes him successful is not afraid of getting fired. But very few people have that luxury. And the question is, for those of us who work in the world where we can be fired, if not by our employers, then by our clients, will we still take the chance and back our ideas that there are no sure things? Will you back the things that have a chance of being wrong? And I think you have to take that chance.